can trade bonds in multiple billion-dollar increments where it can be very difficult to trade stocks in tens of millions of dollar increments. The third thing I would say is that liquidity is relative. There are many stocks listed in the U.S. If I say Fidelity, mutual fund manager Fidelity, does anybody know what I'm talking about? In the U.S., you have mutual fund companies that pool a lot of people's money. Fidelity manages, I believe, it's $3 trillion total. There are many stocks listed in the U.S. that they can't possibly buy because they're not liquid enough for them to buy. I'm happy to buy those stocks because we're a tiny fraction of them. There will be many stocks listed in Rwanda that global institutional investors will not want to buy. But there will be investment vehicles created to buy stocks of companies that are generating very good returns relative to the risk you absorb. So I think it's a both and discussion as opposed to an either or discussion. I think you need a vibrant bond market in order to provide access to capital for individuals to create businesses, and for those individual businesses to actually be aggregated up into bonds, and that will improve the cost of capital and the returns and the value that can be created. I absolutely understand that. But at the same time, there will be owners of businesses who want to finance their business with outside owners' capital, and for those people, they will find appropriate means to do that, even if it will be a few years before Rwanda creates the next Microsoft.
We are doing to respond what you are saying makes sense a lot. As maybe most of you might know, there is 3 ways to fund your business. When you are looking at money, where do you find your money? First, you go to the bank to borrow, get a loan. The second, as a company or as a government, you have to issue a debt, which is a bond. The third you do is just to sell your shares, part of your shares, or you raise a new capital. There's 3 ways you can raise money. As you can see, the first 2, to get a loan from the bank, to issue a debt instrument or a bond, is most popular. People borrow money a lot. So that's what exactly we did at Capital Market. We did develop the bond market in the first place. And thereafter, a year and a half after, we have started with equity market. So today, we have a government bond program, whereby every 3 months, the government of Rwanda issue a bond in the size of 2.5 billion Rwandan francs. And this is through, of course, National Bank of Rwanda, BNR. This is an effort really to develop the capital market. What does it mean developing capital market? It means to you and to me. It means you are being affected on a daily basis. I believe Andrew referred to 10 years the government bond in the US as a benchmark to borrow money. So maybe some of you followed what he was saying. I understand I was very attentive to listen what he was saying. A 10 years bond, government bond means when you are going to borrow your money, you refer to this benchmark, to this interest rate on bond. And in Rwanda still, we can't even negotiate with the bank about the lending rate. When you go to the bank, I have been in the, I'm sorry to name the FINA bank. There is, where is on the wall, is written, the lending rate 17%. This is crazy. So just to tell you, because we don't have capital market in Rwanda, you are being affected on a daily basis. Not just the big companies, but even the farmers in the villages. Because when the farmers are going to buy the salt to this shop, the shop has borrowed money from the bank in Rwanda. I'm trying to break down, really to tell you how the capital market is very important to everyone. That's what my colleague Emmanuel was saying, that capital market is not for the rich people, it's for everyone. And my hope, as I said before, is to see everyone becoming the owner of the business in Rwanda, as well as participating in the bond market. Just what I want to tell you is, the bond market in all economies, in all countries, is mostly for the institutional investors. The large companies invest in bond market. Why am I saying this? In Rwanda, to invest in bond market, you have to have a minimum 100,000 Rwandan francs. This is the minimum to buy a bond. Why to buy a share is 150. You see, that's why the shares is for just a common man. But the bond market is not everyone can buy the bond. But the combination of bond and the stocks and the other securities or instruments on capital market can be also be accessible to everyone. He mentioned what we call a mutual fund with Fidelity and the other companies. I'm also glad that I have here in the room Dr. Buchanan. Can you stand, please? Yes. What does it mean a mutual fund? A mutual fund, everyone can invest in because it's very cheap to you because you combine the stocks and the bonds in the one basket and you call it a mutual fund. All employees can invest in a mutual fund because it's very cheap, accessible as a combination of stocks, bonds, money market, or savings products. You put together and make a basket and available to you. And then we have a well-diversified portfolio, what he was referring to, without buying a share because it's too risky. The bond is very conservative. You don't want to make money. A mutual fund, you can buy a mutual fund with 1,000 stocks or 1,000 bonds for 10. You can have a seat. I just want to tell you the work he's doing today. So you can just buy for $10, 1,000 stocks, 1,000 bonds on the market. Isn't it, Andrew? Is here. You can correct me if I'm wrong. So to tell you, please, capital market is for you. To reach where we want to be will depend on you. If you participate actively, thank you.
We were talking about Bralirwa listing its stocks on the capital markets in Rwanda, perhaps in 1 year, 1 year and a half. I know Facebook is also going to list its stocks perhaps in 1 year and a half. If you had $10,000 to invest, would you rather invest them in Bralirwa here in Rwanda or Facebook in the US?
Everything's relative. The price of the security will have an implied return. But let me try and give you just a couple of things that I would think about. Number one, Bralirwa sells a product that a lot of people can't live without. You know what I mean? So they will continue to sell that product regardless. Sometimes innovation happens in technology, and Facebook is today's Google. Google is yesterday's Microsoft. So things change in technology, that you get innovation. So just if you're considering buying it, personally, my risk-reward profile is such that I haven't actually seen their financials, but if they can generate a 15 or 20% return over a long period of time and benefit and leverage off of, leverage meaning grow even faster than the Rwanda economy for how they actually run their business, that to me is a very, very attractive investment. If Warren Buffett were here, and I won't necessarily speak for Warren, this video won't go out anywhere, right? The types of things that a lot of long-term investors like. Facebook is a cool company. I'm actually not on Facebook, but I'm told it's a cool company. So there will be a lot of people who buy Facebook, but that'll make it very expensive. So my personal choice would be a very well-run beverage company with a lot of unit growth ahead of it, but I can't, it's difficult to say until you see the financials.